Sorry. Let me start again. Okay, now we're on to charts of interest. We're going to start with XIV. This was a pattern 7 right here where it was down out at Z minus 3. The entry points in this are when it comes back to Z minus 2 or Z minus 1 using a full SD as the stop. So we could have bought that at 31.5 with a $5 stop, or we could have bought this here at 28 with a $5 stop. In both cases, you participate in that trend, and now you can see the dragon is rolling up and volatility returning to normal. We still have quite a distance to go up here to the 270 regression line. Now the RLFF looks for this kind of move, the maximum excursion from the between the 10 period regression line here in blue, which we take to be the short-term fair value, short-term traders fair value, and then the RL 270 is the fractal that's 3 times higher than that. So we say 10 times 3 gives us 30. So the fast pair is the 1030, and then 3 times 30 gives us the 90, and 3 times that gives us 270. So that's the slow pair, and then what we look for is the difference between the 10 and the 270, between the fast and the slow. So I take the 270 to be the long-term fair value for the, and then the 10 period to be the proxy for price or the short-term fair value. So the difference between the psychology or the estimate of fair value between very short and very long gives us the opportunity to trade the difference between these two competing views of what fair value is based on time frame. And so this 270 up here, and then there's the green line is the 90. That sort of is the intermediate. So down here on the 10, when we see this kind of setup, that sort of universal entry, we look at the 90 and the 270 as the two steps that this thing can get to. Now there's a time decay in this, and that's where we are right now. We're back to the Bollinger Band mean. And so that's the Bollinger Band mean, the 90 period regression line, the northern edge of the dragon. I still like this one with a stop down here about 3180, with the idea that it can still get to 42 as part of a normal correction. That's what the RLFF framework suggests. What I want you to notice is this. I'm trying to zoom in here just a minute. Well, one of the ways to detect a really extreme move is when you see this, when the dragon comes all the way out of the river. That's really kind of remarkable. And that tells you that you have already seen a really extreme move. Let me try that again. So when we zoom in, this little, you rarely see that phenomenon. For the dragon, which is this pink line, that pink region, for that to come all the way out of the river like that is really extreme. And when it comes back in, that sort of tells you, that's the move. That's the direction we're going. And now the bottom side of the dragon should act as a stop. What I like about the what we're looking at here is that adaptive parabolic stop and reverse. When that gets back inside the dragon, that sort of says we're kind of back to normal. And so I like this support level here at 32. And we are at the Bollinger Band mean. And so a normal continuation so we're at the Bollinger Band mean with a stop down here below the dragon, looking at the far side of the river, the 270, the far side of the floodplain. And even if we just take that local maximum right there, that's sort of the natural spot. Okay, so I like XIV here. I'm going to continue to be a volatility trader. So I like the upside. All right, let's take a look at some of these other charts of interest. Let's take a look at oil. All right, so we have a nice RLFF. You can look in the chat room to see Sonal's markup of this one. So this sideways quadrant, we've had 10 days for the price to collapse, and it hasn't collapsed any further. So now what we're interested in is that difference between the 10 period regression line, which we would take as fair value, and the 270. So if we hypothesize a stop below this region, on the upside, we have Bollinger Band mean, far side of the river, far side of the floodplain. There's at least 3 to 1, even if we take the bottom of the floodplain as the stop level. So if we were to get some kind of price movement like this, we definitely want to be long, and then we can just track as we go through time. We're looking to see a move this way, even though the market itself is coming this way, so we adjust our targets accordingly through time. But that still looks like a very favorable move. And again, if I were a conspiracy theorist, I'd say after the November elections, I wouldn't be surprised. Combination of strong dollar, rebound in the indexes, temporary surprising weakness in oil prices driving down gas prices at the pump, does nothing except help the Democrats in the short term. Almost, like I said, if I was a conspiracy theorist, I would read into that. Okay, so that's USO. Let's take a look at DuPont. Well, let's look at the indexes first, I should say, before we get too far. Now, I want you to compare the move in the small caps. It's already out into the beyond the floodplain. It's already past the 270 RL. This could be the big turnaround now in the small caps that we've been hoping to see. Here was the move from the between the 270 and the RL10, and it zoomed right through. At this point here is where it could have and should have stalled if it was going to stall. It didn't. It blew right through the long term and is now pushing the upper envelope, and you can see that the Bollinger Band has started to turn. The dragon has come out, the top half has come out of the river after it's made its nice turn. This is all systems go and a shift back into the growth maybe with the when the elections get resolved, we get some more gridlock. That could be interesting. The Dow 30, same kind of process here, although you'll notice that the RL270 was not decaying, it was flat, and we had this move here from the RL10 to the RL270, and it crossed the 90, which was right along with the Bollinger Band mean. It reached the far side of the 270 and is now continuing. Already at all-time highs. This is a weekly look at the Dow. That's one hell of a move. Here was the Z trade. $165 with a stop here. And now we're on the far side of the river, or far side of the floodplain, excuse me, and everything pointing north. And right now, fair value by the 10 period and the 270 are still equal. I really like that as a signal for the upside in the Dow. We should continue to see that. Next up is Brazil. This is a lot earlier in its recovery phase. This is still weekly. Here's the Z minus 3. It just went to Z minus 2. I think you can buy it here at 43 and a quarter with a stop at 40. So a $3 stop, or $3.50. And you're looking at near side of the river, Bollinger Band mean at 48, far side of the river. Okay, let's go back to our dailies. I want to look at DuPont. What I like about DuPont here is it found support down here, this double bottom, found support here, higher low. It's right at the long-term 270, so I'm looking for 71 and then 73 on the upside. And I like this last little sense of urgency here. That energy was really strong. DuPont on a weekly basis, the longer-term trend is even better. The 270 is going to keep steaming north. The 10 is going to steam north. It's going to get up to 73. Everything is pointed to the upside with this as a nice support level down here at 65. That's all support. It's got to get through 70 here. And when it does, it's free and clear. It'll get through 73 and then off it'll go. So I like DuPont to continue. Let's look at my current favorite, Home Depot. Yeah, baby. There's Home Depot. Off we go. I mean, there's no looking back. hold your nose and buy it. With the stop down here at 87, you can just own that. Look, I mean, when the rest of the market was melting down, this is what Home Depot was doing. Hardly anything. Barely noticed it. Shifting back to the daily. Yeah, that sell-off was hardly noticeable. I mean, you'd have noticed it for sure, but that's nothing. And it's well above that previous support level, that previous resistance level. Off it goes. Let's take a look at its running buddy, Nike. Same basic thing. The gap up from earnings seems to be holding. It's well above the previous support level. Off it goes. River's pointing up, pulling away from the long-term fair value, which is rolling up. The 90 is up. The 30 is up. The 10 is up. You can continue to reinforce that intraday with turbo positions. Let's take a look at Netflix for Hunter. All right, so Netflix was on the, if I remember, this was the RLF to the downside. So really, it's this move here. So we would take 460 or 455 as fair value, and this is a nice little structure in here, finding support at 375. And a nice little universal entry with targets here at the Bollinger Band mean, and then far side of the river with a stop down here at 370-ish. That looks good. The last one I want to look at is corn. Oh, FB, yeah. The second to the last one is this is an opportunity to buy Facebook on sale. The response here was to their decision to say, hey, they're going to make strategic purchases with their share price this year and not try to earn as much money, but try to continue to position themselves. And so the stock, in the face of that logical strategy, it went from 81 to 74, a 10% haircut. So this looks to me like an opportunity to buy Facebook on sale. I would take this as support down here, say it's 72. Yeah, $4 stop, hold your nose and buy it. Last one I want to look at is corn. I like this. Corn is back to its fair value. This was on a longer scale, this is what I want you to notice. The difference between on this vertical stump here. In this red, I'm highlighting this great distinction between the 10 and the 270. And now the nice move is what brought it back into alignment. The short-term and the long-term fair value have rejoined, and that to me is the swing trade. The last time that it was there, it was back here like this at around 31. Then you had a nice distinction, then nothing, a big second failure, now it's come back. So I am tightening up my swing trade now on corn. It's made the move that I was hoping to see. So now we're back to fair value. All right, so this is what that move looks like, zoomed in a little bit. Here's the 10 and the look at the 10 and the 90. The 10, the 30, and the 90 were all down here at 22.90, and the upside target $26.75. Now you can say as we go through time, you can keep adjusting that forecast of fair value as it's decaying. And so here at 25.75 is where everything links up again. I think as the 90 comes up, if this thing pulls back, we end up seeing price go like this and then bounce. So that wouldn't surprise me to see a pullback to here as part of this longer term move. Okay, now the last one, we'll look at Apple real quick. That's all-time high, isn't it? Yeah. Well, this is how I normally estimate that, especially when it's that far above. I take a look at what was the upside move. How far did the 10 ever get above the 270? All right, so that looks like about an $8 move is about how far it's been making $8 moves when and then it rolls over. So these are all $8 moves off the 270. So now the 270 here is at 109, call it 103. So I would say 111. This would be the $8 move. You know, so this size of a move would take it to about 110. So you're at 108 already. So I think there's about $2 more. What makes this interesting, and a couple things though, the reason I might stay with this even longer though is that you got tech is by far, U.S. tech is by far the strongest region. Apple is at an all-time high. The market just went through its previous swing resistance, so there's no resistance overhead in the broader large caps. Volatility is just getting back. It still has halfway back to normal, but still has a good long way to go. Apple's a leader, so I think there's reason to believe you could get another. I think there's good reason to believe in 110, but I wouldn't cash it at 110. I think there's reason to believe it can go beyond. So that's my sense there, Jeff. Does that make sense? And I would say the stop down here at 103, on the underneath the dragon is at the edge of the river. Depending on where you got in on this thing, if you got in the lower half, well, it depends on how much, what size position. I think on a tactical trade, I'd be right here about 106. Let's look at this little. Let me clean this up a little bit. Since we're talking swing, let's go take a look at. We're going to dial down to the 2 hour and see what we can see. I wouldn't have any problem with this right here, the Bollinger Band mean about 106. I think that's sort of the trail. I mean, you look at the last move that it had, that was probably 30 or 40 dots before it got violated. I'd feel safe about 106. I would use the 2 hours Bollinger Band, the Bollinger Band mean on the 2 hours. I think that works pretty nice. Once it crossed back above the 270, this red line, the Bollinger Band mean, looks pretty good. I think that's how I'd trail it right there. That way you're not going to get smoked intraday. What I think happens is it goes up and then there would be a mad rush to preserve profit, so you'll get kind of a one-day downward spike, I would guess. So I think I'd use the 2 hour charts and the Bollinger Band mean, or even that regression line 90 looks. I mean, it's about the same thing right now. I think I'd use that. Okay. All right, we've been at it about an hour now, so that's everything I wanted to cover. I'm going to stop recording here, and we'll get this posted. If there's no other questions, you guys have a good week in the chat room. I'm out of the jury duty now. I'm going to write something up this week about this blended monthly rebalancing tournament, this collaborative tournament. I think we've got some work for the community of practice to do to keep revising and extending that. So I'm looking forward to that. That should be fun. I'll get this thing processed and uploaded at YouTube. And I will post that's going to be a private link, but I'll put that link in the chat room. So you guys take good care, and we'll see you in the chat room.